Bitcoin is back above 60K as the market completely ignores the horrible jobs report and unemployment rising to 3.9% because it senses that the money printer is about to turn back on. We get into why the market doesn't seem to trust the government. And it's not just because the president's financial advisor can't even answer how the market actually works. The money is a lie, ladies and gentlemen, and the world's starting to wake up to it. Got Bitcoin? Welcome to the Bitcoin Daily Show. I'm Dante Cook, head of Swan Business. We're living in the upside down right now. On Wednesday, Fed Chair Jerome Powell said a substantial weakness in the jobs market could prompt rate cuts. Well, the market got what they wanted, as non-farm payroll jobs came in at $175,000, significantly lower than what was expected. And you know how we know that this number is much worse than that? Because every single month since January of 2023, each time the government has revised the numbers or told us the real numbers, the numbers for payroll have been much, much lower. One of the largest sectors in the economy is clearly showing that there's a weakness in demand and a weakness in the labor market, as construction job openings had their biggest drop of all time. April unemployment rates rose to 3.9%. And how did the market react? Well, I told you we're living in the upside down. And the Dow soared 500 points on the news of a bad labor market. And Bitcoin, being the leading indicator of global liquidity, is up over 4% today, over $61,000. The market understands that liquidity is the tail that wags the dog. And the tail is wagging. The M2 money supply flipped positive for the first time since January of 2023. And you know what that means. Uncle Rome is going to make the money printer go burr because the Fed has unlimited, infinite amounts of money.
Your ATM is safe, your banks are safe, there's enough cash in the financial system, and there is an infinite amount of cash at the Federal Reserve, an infinite amount of cash at the Federal Reserve,
an infinite amount of cash at the Federal Reserve.
This may be an obvious statement, but it seems like the market doesn't trust the government. Bond prices are now trading at 2013 levels and have broken a 40-year trend line. The government continues to issue more debt to finance its losses. It's expected to issue $1.9 trillion in bonds in 2024 alone, which dwarfs the amount that was issued in 2008 during the financial crisis. You know what? It's actually okay. It's not even that big of a deal, because you know that the government completely understands the implications of their actions and are taking countermeasures to ensure that there isn't a total calamity and disaster on the other side. Don't they understand?
The U.S. government can't go bankrupt because we can print our own money.
It obviously begs the question, why exactly are we borrowing in a currency that we print ourselves? I'm waiting for someone to stand up and say, why do we borrow our own currency in the first place?
Like you said, they print the dollar. So why does the government even borrow?
Well, again, some of this stuff gets, some of the language that some of the language and concepts are just confusing. I mean, the government definitely prints money, and it definitely lends that money, which is why the government definitely prints money, and then it lends that money by selling bonds. Is that what they do? They sell bonds. Yeah, they sell bonds, right? Because they sell bonds and people buy the bonds and lend them the money. Yeah. So a lot of times, at least to my ear with MMT, the language and the concepts can be kind of unnecessarily confusing, but there is no question that the government prints money and then it uses that money to, I guess I can't really talk, I don't get it. I don't know what they're talking about, because it's like the government clearly prints money, it does it all the time, and it clearly borrows, otherwise we wouldn't be having this debt and deficit conversation. So I don't think there's anything confusing there.
I don't know how confident you feel, but I feel very confident, considering this guy is the chair of the economic advisors to the President of the United States of America. And in a comedy for the ages, MMTers are coming out saying that money and debt is very different than what we've been told that it is. It's all a lie. US government debt isn't actually real. It's actually a US government savings account. Check out the trailer for this upcoming film created by MMTer and self-proclaimed economic theorist Stephanie Kelton, talking about why money printing isn't actually an issue.
So much of the public discourse, it's like we're going through life with one eye shut and one eye open, and we're only getting half the picture. And then somebody like me comes in and says, well, let's make sure we see the full picture. People naturally think, wait, government deficit bad. This is a negative thing. Let's stop this right now. And I say, hang on, let's open the other eye.
The government debt is not a burden on anyone.
The national debt is exactly the opposite of what the orthodox story tells us.
This modern monetary theory.
Modern monetary theory.
What is MMT about, and why has it suddenly exploded?
The last thing we need is some harebrained theory.
We're broke. America's broke.
Congress has spent all the money.
Does the government have to borrow dollars? No, of course not.
They don't find the money, they create it.
Is that what they do?
Where does money come from?
There's a theory that says we should not be looking too closely at money.
Didn't they tell you? You never touch the money question.
You're going to scare the hell out of everyone.
You could take the national debt clock that scares everyone and just rename it the US dollar savings clock.
So now don't you feel better?
The true story of money is not the story that I've been told.
If you do decide to check out more about MMT or modern monetary theory over the weekend, just know that you won't be smarter on the other side. But if you do, let me summarize here, and I'll do my best to channel my inner John Haar, Swan private member who loves talking about MMT. But if you do decide to check into MMT, what they're saying in a nutshell is that some governments have the ability to have perpetual deficits and print money that they've created out of thin air, and everything will be okay. Obviously, that's true. But one of the things that this economic theory really misses is, what are the implications of that, ethically, morally, and also how does that end at the end of all of these experiments where this has happened in the past? Bitcoiners understand something that MMTers and everyone else doesn't understand in the market. Bitcoin is the only desirable and scarce asset in the digital world that we're moving into. People have two options. They can continue to bet on the old system, that is, rising asset prices, deflationary economies, and interest rates going to zero over the last 40 years in the backdrop of infinite money printing. Or they can bet on a world where assets are going to be hard to come by, specifically scarce ones. They can bet on the innovation of the future. They can bet that open, interoperable, decentralized networks will have more value than centralized and controlled networks. I'm betting that digital scarcity will be the most valuable thing over the next 40 years. And in that world, as Michael Saylor said in his There Is No Second Best presentation that he gave at the MicroStrategy World Conference, Bitcoin owns a 97% market share in the proof of work economy. If I were betting on the old world, I bet on a company like Apple. The $2.85 trillion company said that revenues were down 4%, earnings per share up only 1%, and its stock price rose 7% because it said that it was doing a $110 billion stock buyback program. But you know what's not infinite and you know it's not scarce is the issuance of stock shares. And on the other side, a company that seems to be betting on the future is a company like Square or Block, who says that they're going to use 10% of their quarterly gross profits to buy Bitcoin. And the market doesn't seem to be rewarding them right now, as they're about even or even a little down for the day. But are you going to look at what happens in a day, or are you going to think about what's going to happen over the next 20, 30, or 40 years? And because I love sports, and I love all of our viewers of the Bitcoin Daily Show from Canada, I do want to leave us with a little clip from Game 6 of the Maple Leafs versus Boston Bruins, when William Nylander sealed the deal with his second goal in the game to force Game 7.
Scores! William Nylander doubles down!
You have to skate where the puck is going and not where the puck is. And with that, we're signing off for today. This is Dante Cook with Swan.com. Happy stacking.